Hello everybody, welcome to this week's live stream. I'm David Jones and we do these every Friday normally. Quick catch up with what's been going on in the markets. We'll get into things in a minute. I just thought I'd have a quick look. Clearly the big focus this week has been on that US interest rate decision that we had on Wednesday. And as ever, we saw once again a bit of a headless chicken reaction from the market. So the market, this is the S&P, this is Tuesday night, so pushes up and then dumps in the last hour of trading. I think it's made for a really interesting end to the week for a few of these big markets going into next week, but more of that in a second. First of all, let's get their housekeeping out of the way. So it's the weekly live stream. Let's do a risk warning. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. So how we do this as usual, I'll go through some of the major stuff that's coming out next week. We'll look at some of the major markets. Then if there's any stuff you'd like to look at, if you put it in the chat, and we'll take a look at it after. But we've had a big week this week. We had the US interest rate decision deciding to raise by 0.25% in the end, perhaps influenced by the mini banking crisis we had. We had the UK interest rate decision on Thursday, yesterday. 0.25% from the Bank of England. So next week is a bit quieter, but there's still quite a lot of stuff going on. So Wednesday, I haven't cut out US interest rate decision. There isn't another US interest rate decision next Wednesday. I should have taken that out. So Wednesday is Australia inflation data. Clearly inflation and interest rates still very much the focus. Thursday, we've got US GDP. That's arguably the biggest thing of the week next week. For me, so US quarterly GDP update. How well or not is the old US economy doing? Friday, we got UK GDP, first thing in the morning. I think that's 7 o'clock, I think, UK time on Friday morning. And then we've got EU inflation a bit later on in the morning on Friday. So the end of the week is when the big stuff is. And for me, it's Thursday's announcements. And as Richard says, don't forget, most of Europe goes back to summertime on Sunday, so back to the normal 5 hours difference between London and New York. So thanks for that reminder. It is always a bit weird if you're here in the UK. The US stock market for the last couple of weeks has been opening at 1:30 our time because we haven't flipped to British summertime yet, but we clocks go. Which way do the clocks go? Forwards. Clocks go forwards? Yeah, it is, isn't it? Spring forward, yes. So the clocks go forward on Sunday. So we're back to the normal difference. But Thursday's the big one for next week for me. As usual, a word from our sponsor, which is me. A different word this week though. One of the things I often get asked is, who do I trade with? And now I work for myself. I'm not really tied. I'm not tied to any one broker. So I thought I'd do a broker recommendation this week. It's someone I've traded with off and on for about 15 odd years. And I think in this day and age, when it comes to trading, there is very little to choose between trading platforms. They're all pretty good. They've got charts, they've got prices, they've got news. On the face of it, we're quite spoiled, I think, as individual retail traders. And they're all okay. There's only one company, and I'm not going to mention them, who I absolutely would never trade with. And I traded with them about 6 years ago. And I remember their platform went down for about an hour over, I think it was an US interest rate decision back in, I think it was 2016 probably. And their support, couldn't get hold of their support, they were absolutely hopeless. So I'd never trade with them again. But most brokers, perfectly fine. So there's not much to choose between platforms when it comes to functionality. But for me, if you've heard me talk at various points on YouTube over the years, the big thing for me that makes the difference is tracking my own performance. Is there a way, are there tools that help me highlight perhaps bad habits I'm starting to pick up, areas I need to work on, all this sort of stuff. So for me, that's always been an important part of platform functionality. Most brokers don't really have it. And if I was a broker, I probably wouldn't do it either, to be honest with you, because we know that most people lose. So if 75% of people lose money, do you want to give them a tool that highlights that they're losing money all the time? Probably not. But for me, the trade analysis bit of a platform is it makes a massive difference. So I've done a video on it. If you go to the website, it's a 10-minute video, jonesandmarkets.com/broker, and you can watch this video where I go through some of the trades I've had open over the last couple of weeks, but more about this performance tracking, and you can try it out for yourself and see what you think. But I'm happy to recommend them, and most of my trading, I think from now on, will be with them. I'll use it. I'll use the platform. I'm just in the middle of setting up another account to use in these live sessions from next week, so we'll do some trades on it next week. But if you go to the website, the link is in the description as well. Then that's there. Quick word about the trading course. Of course, I run a trading course. You can see it on the website as well. Those were the 3-month results from October through to the end of January, trading with a real account. You can see more information on that on the website. You can read the Trustpilot reviews, 5-star reviews. I do a newsletter that will go out. I'm just halfway through writing it now. I send it out every Saturday morning, free of charge. Again, on the website, on any of the pages, if you scroll down to the bottom of the page, there's a box to put your email address in, and you'll get that tomorrow. So I look at what's going on in markets, what market's hot, what am I looking to trade over the next week, and a trading tip in there. And a trading tip, not buy Bitcoin because it's going to the moon trading tip, but a trading tip to hopefully help with your own trading. So that's the newsletter. And if you're on the website, you can sign up from there. And there's the website, jonesandmarkets.com. Any questions, drop me an email, dj@davidjonestrading.com, and I'll answer any questions that you may have. I am in the middle. There hopefully will be a new website next week, which is going to look something like that. So there's a whole load more information coming. But for now, the existing website has all the information that you have on it. But if you have any questions, feel free, drop me an email, and I'll try and answer them. Right, that's it, isn't it? Let's go. So a bit about what I've traded this week. I was long the S&P coming into this week. So I bought it on Friday, last Friday, after the live stream. So Friday afternoon I bought it. I was a bit underwater on Monday, and then it went up, and it sprang up obviously into this interest rate decision, and I came out as it came off. I was short oil this week, really unfortunate. Or not unfortunate, just how it happens sometimes. We'll look at these markets in a bit more depth in a minute. I was short oil. I got stopped out just yesterday, just above 71, and it dumped today. So I missed that. But I was short the DAX as well. I went short the DAX, the German market, about 15, 150, 60, something like that. So that went a bit against me, and that's been okay. But I'm out of that now. So I've got no short-term trades on at the moment. I've got some medium-term trades on, but nothing on the short term. So I'm looking forward to see what happens next week. But I think there's going to be a bit of opportunity. Let's take a look at some of these big markets, though, the bigger stuff. Let's take a look at S&P. So S&P, this is the daily chart. Let's bring up the old squiggle. I mean, it's quite an exciting day today. It's pretty boring from a medium-term point of view. I mean, it's slightly... Is it up for the year? It must be up for the year, mustn't it? It's slightly up for the year. And for me, the question on the S&P is, and what I think, is pretty much the same as last week. The trend, I think it's broken out that downtrend because we had a higher high up here. I think these old lows are important down here, the major low before it pushed out to that high. So I'm a buyer of the dip, basically, on a medium-term point of view. I've got medium-term trades on the NASDAQ at the moment. I've got a lot of S&P in my pension, like a lot of people, just buy exchange-traded funds. So I think, but it just needs to get a move on. You can see it's been a pretty tight few days for the S&P. So broadly positive, but a little bit boring looking at the medium-term chart. But what I'm wondering, going into next week, for a short-term trade... it's been open for just over an hour now, a little bit choppy. for me, the level that's going to be important next week, it might just take off like a rocket today, but these old lows from Monday, is that Monday of this week? Yeah, Monday of this week. So 38, let's call it 38.60. Let's see what happens. So I'm still, I think, in sort of buy the dip mode on the S&P from a short-term point of view. We'll see how that works out next week. But we had a lovely little trend that was chugging along. There you go. That was our little trend. So when did I say I bought in? I bought in last Friday, didn't I? And then the market carried on up. And we've come off a bit, and we're sort of chip-chopping around the trend at the moment. But I think that's an interesting market next week. So I'm leaning towards being a buyer of the dip. Let's see what happens. Daily charts, though, a little bit boring, but big support on the daily charts for me. It's actually it's the lows from the end of last year, lows beginning of this year. Let's see if this market can get a bit of a move on from here. The Nasdaq's interesting. That S&P has been under pressure. Nasdaq's held quite well. That was the move on the Nasdaq after the interest rate decision. So on the decision, just before the decision, the Nasdaq was trading at 12.8. It got as high as 12.950 and a little bit, and then completely tanked again in the last hour, going from 12.867 down to 12.574. So we saw nearly a 300-point move in that last hour on the S&P on Wednesday. But it has pretty much held above the low from Wednesday, where it closed on Wednesday. So 12.575-ish on the S&P has been something of a level. Again, if we flip it back to the dailies, let's take that line off. I mean, on Wednesday, the Nasdaq did hit its best levels since, got to go back to August of last year. So what's that? It's a 7-month high for the S&P. The Nasdaq. So again, for the Nasdaq, I'll be a buyer of a dip. Perhaps we do get a bit more of a dip next week. I don't know, but lots of support. If it does start to break down a bit this afternoon, next week, 12.4, these lows from Monday of this week. So there's a lot to watch from a short-term point of view. They might not look too exciting from a daily chart point of view, but short-term, a bit more interesting, I think. Let's see what happens. So looking to see if these US stock market indices can get a bit of a move on upwards next week. Here is the DAX, the German 40. Why aren't my dividers showing up? Anyway, there's the DAX. Bit of a scrappy week again. Well, not again, but a bit of a scrappy week overall for the DAX. So the DAX had been a good performer. If we pick up on the lows from last October, all right, it's broken down out of that trend. So maybe a bit sideways, maybe a bit choppy. I don't know. I think on the daily chart, it's a difficult call, the DAX, on the daily chart. I mean, it has had a much better run than these US indices. So it's perhaps a bit vulnerable if we see US indices under pressure. So I'm not that bothered either way on the DAX at the moment. Let's take a look at the FTSE. I think the FTSE is interesting down here. FTSE, so the UK's stock market index, very different makeup, of course, to the old the S&P 500. But if you really wanted to be a buyer of the FTSE, I think it's interesting down here. The level on the way up in December traded down to 7,300. Then we had a 10% run into those highs in February, and we're back here again. So if you thought this 7,300 level was something of a line in the sand, I think it's an interesting market to watch next week. We did spike through the lows, the old lows, but turned around pretty quickly. So I think that's another one next week that's got some potential for some action next week. Let's see what happens. But like for me, there's probably not much urgency to do anything today. I just sort of finished the week up really flat. But on the FTSE, 72 to 7,300, are we going to see it hold the market up from here? Let's see what happens. Now, what else is interesting? Well, oil is interesting. I think it's interesting anyway, because if you go back, we go back a year ago, we had the price of oil out to multi-year highs on the Russian invasion of Ukraine. It had another go at those highs in June of last year, couldn't do it, and then sold off. So if you were going to pick up on the trend, if you're going to be all textbook about it, then the trend absolutely looks like that. So the big trend for oil is down. We were stuck in this sideways range here on oil from December through to the beginning of March, and then it started breaking down. And in the last, when was it? Just this week, oil traded down to $64 a barrel. And that's the lowest it had been since December 2021. It's quite interesting though. If we go back to December 2021, let's zoom it in, hold on. The price spiked to 64, but didn't stay down there very long. So we saw quite a sharp turnaround. Sentiment was different then, I think, in oil compared to how it is now. But it's interesting that we have seen a bit of a spiky turnaround for oil off these levels. So what next? Well, I think the absolute textbook approach, the trend is down. If the market rallies, then for me, I would want to be short. We've got this big barrier for oil up at these levels. If I could draw it properly. Hold on. Up at 83 and a bit. 80 to 83 has been a big barrier for oil. So for now, let's see what happens. But I wonder, from a short-term point of view, it had, relatively speaking, quite a good run this week into yesterday. We'd seen higher highs, higher lows all week. We have seen it crumble since about 3 o'clock yesterday. But I wonder, does oil think about having another go next week at $70 plus? So that for me is another market to watch. Like I say, I had a losing trade on oil this week. I went short. Where did I go short? I can't even remember. It would have been, I think it would have been in here somewhere, about 68, and got stopped out just above 71, and the market has turned around. But I wonder, is he going to have another look next week at those 71.5 highs? Let's see. Let's see what happens with oil next week. But that's another interesting market to watch. Natural gas has been relatively quiet. By natural gas's standards, it's been a bit of a quiet week. If we pick up on the trends, once again, if we pick up on the big trend from here, natural gas is absolutely still in this big downtrend. And it would take strength through $4 to even suggest that trend was changing. Yeah, so textbook point of view, big trend is down. From a shorter term point of view, we've got this. We have had this level. Let's get rid of that one because that's gone. These old lows, they're only from the 22nd of Feb, but the lows in gas just ahead of $2, and the price went up almost 50% into the beginning of March. But we have been undeniably in this downtrend since then. So I think that the question for natural gas is, have we seen a shift in sentiment over the last, the last month, let's call it, and is $2 going to be the floor again for natural gas? I mean, as we know, natural gas has been absolutely one of the more volatile markets of the last 6 to 8 months. So I'd be in no rush to try and be a buyer ahead of $2. But I think it's another interesting one to see, well, does it try and form a base again next week ahead of these old lows? Let's see how it turns out next week for natural gas. But I think $2, big level to watch. So let's see what happens. Gold, I've been surprised. This move in gold, I've been looking at a medium-term short on gold using options, because of course I could be wrong, but I do wonder, if we go back to last year on gold, so Russia invades Ukraine, so we have this land war in Europe. Even with that happening, the price of gold could not break through the previous all-time highs from August 2020. So what is going to make gold break out to fresh all-time highs in the next, month, 2 months, 3 months, whatever? Of course, if we saw a collapse in the US dollar, that would definitely help. But, I do wonder, is it going to struggle up here? But the trade I'm thinking about doing is one where it doesn't have to be right straight away. But anyway, it is undeniably strong for now, gold, but if we look at that, clearly we're getting near the top of the range for gold. So if you absolutely wanted to be a seller of gold, I think we're in the zone, aren't we? And for me, my first target would be a slide back to 1800, which again is only the lows from the 8th of March, 2 weeks ago. It's gone from 1800 to 2000 nearly, the price of gold. So it's been an interesting market, that one. And is the trend still up? It depends what happens Let's plonk a quick trend line on this and see what it looks like. I mean, I would say it almost looks like, I mean, it is the perfect short almost, which means it wouldn't work. But you know, if I was going to go short now on a shorter term chart, I'd take the view. Okay, we had this great run up, bang, bang, bang. The market fell out the trend line. We've had a retest of the old highs, and it can't get through. And the old highs are 2010. So it's an interesting trade up here. There's also a bit of RSI divergence, bearish divergence going on for those of you who are fans of the old squiggles. So that's interesting. But yeah, I mean, I absolutely would not have thought that gold would be threatening $2,000 an ounce by the third week of March. But there we go. So that's the gold price. Really interesting up here. Like I say, I can't quite believe we're going to go sailing through these old levels, but that's what stop losses are for. Let's see. Let's see what happens up here for the gold price. Silver, obviously the market always hates silver. You know, silver's had a great run as well. Silver's up 15% in just the last 2 weeks. Silver still strong, stronger than gold at the moment because it's pushing out to highs. You know, if we were going to pick up on a trend for silver, you know, it looks something like that at the moment. So it'd be a bit, you know, I never trade silver because it always wrong foots me. But I'd be a buyer of the dip on silver. You know, good support around 22.70, 22.80 from a short-term point of view. We do have a bit of a hurdle coming up. This whole big congestion-y area up here with $24.50 at the top. So again, if it's going to start rolling over anywhere, I'd expect it to start stalling over the next week. But let's see what it looks like in a week's time. The price of silver, and see what happens. I've just seen somebody mentioning Wall Street bets. There was the move in GameStop, one I remember, wasn't there? If you remember GameStop, I would absolutely have gone short into that thing. It exploded, didn't it? What did it have? Did it have earnings? So it closed on Tuesday at 17.65, and it opened at 26.60, and here we are at 22. I mean, the trend is down, isn't it, on GameStop? I mean, it is nuts, isn't it? But yeah, anyway, that's a slight diversion. So let's have a look at some of the currencies. We'll start off with the dollar index. So I am still short the dollar index. I got a medium-term short on the dollar index, but I do I've got this WhatsApp group for those who've been on the course. And I did say this week, it'd be interesting to see what happens if this thing nudges back to those lows. So I don't know. What happens next with the dollar index? I'm still short. I'm still in profit by a bit. But we've seen a bit of a turnaround the last couple of days. So if you thought, this was the old trend in the US dollar index, and this move here was reversing that trend, then assuming it ends around about here today, I think it's an interesting medium-term buy, the US dollar index. And if I was a buyer, the absolute closest I'd want my stop is yesterday's low, but I'd probably go a bit further away than that. So it's interesting, I think, what's going on with the dollar index. It has been under pressure this week. I think with the Fed saying that they're getting near the end of their interest rate rise cycle, put a bit of pressure on the dollar index. Let's see what happens. Like I say, I've got a trader. I'm short. I've been short for about a month probably now. So let's see. For me, I'd rather, for my short, if it breaks below 100 and a bit, it's good. But I am a bit wary with it turning around ahead of those old lows. Let's see what happens. If we break through 106, it does look like there's a reversal. Yeah. So dollar index, really interesting market. Normally, quite a bit, some nice trends. You can see here on the hourly, some nice trends, some nice moves, and then some crazy moves occasionally. It was an interesting move here on Wednesday the 15th. Market goes roaring up, and then only to give it all back and more. Let's see, what is this? Is this an opportunity to sell short the dollar index, or is it the start of it turning around? I don't know. But for me, the big level to watch are those Feb lows at 100.8-ish. So I think that's interesting. So euro dollar, obviously, whatever the dollar's doing, the euro's going to do the inverse of it. I still think the euro trend is intact from September last year. I'd still be a buyer of a dip. 104.80 is the big level. It's had a bit of a run up, but because the dollar's come back the last couple of days, the euro's been weaker. So it's a bit boring, really, isn't it? It's back to where it was 11th of Jan. Pound against the dollar, again, it's a bit sideways. Had a good run this week, or the last couple of weeks from 118. Big support at 118. Doesn't like 124.50. What can you say? There's not a lot else to say really about that, is it? It's just stuck in something of a sideways range. I did look at euro sterling earlier this week. It's not normally a market that I follow that closely, but I thought it was interesting that it pulled euro against the pound. So if we take the dollar out of the equation, had slipped near the bottom of the range, and we had seen a bit of a bounce, but nothing too interesting there either. So yeah, nothing. It's all to do with this dollar index, isn't it? What's the dollar index going to do? Let's see. Let's see what happens. Do we see a bit of a rally again next week, back up to 106? See what happens. And we'll have a look at. What do we get next? Have a look at Bitcoin. Here we are in Bitcoin. I can't even remember. What did I say about it last time round? I mean, I think it's a big break this in Bitcoin. So, we'd had the trend down for a long time off the November highs. Broken out that downtrend, and it's broken. In the last week or so, it's hit its best levels since about here, since June of last year. So I would be a buyer of a dip on Bitcoin. There doesn't appear to be that much hype around it yet, but for me, if it starts to sell off and gets back to the low 20s, I think it looks quite interesting again, Bitcoin. And if we're looking for targets, I'd just be looking at previous sort of resistance levels, 32.5 maybe next. Let's see what happens. But yeah, I'd be a buyer of a dip on Bitcoin. Let's see where it goes. But so for me next week, interesting stuff to watch. It's pretty much the usual US stock market indices, NASDAQ and S&P, because we have seen a bit of volatility this week. I am still leaning towards being a buyer on a dip, so I think that is interesting. The other one is the price of oil. Absolutely, the big trend since a year ago is pretty much down. But I do wonder, in the short term, has it been a bit overdone? Is 64 going to end up being a bit of a level? Blah, blah, blah. Let's see. So I think that's, so for me, more than enough really to keep me occupied next week. I'd write a bit in the newsletter this week about focusing on a smaller number of markets rather than trying to trade everything. Because absolutely in October, November, December, January, I was trading a whole load of different markets and it went well, but it is a bit tiring. So I think there's a lot to be said for just focusing on a small number of markets. So for me, and I'll talk about it more in the newsletter, the reasons why, but oil and US indices are always the big focus for me, week in and out, and the US dollar index. So plenty to watch. Let's see what happens. We'll jump in to some of the stuff you want to have a look at in a second. But don't forget to see that broker I use and the reasons why, and a quick 10-minute walk through why I think it's a good broker to trade with. It won't be for everybody, but it's important for me because it tracks my own performance. Go to the website, jonesthemarkets.com/broker. Okay, have a look at that. And the description is in the, or the link is in the description. Right, let's have a look at some of the stuff you would like looking at. Nvidia. They were recovering, weren't they? I seem to remember. Nvidia Corp. And they have continued to recover, haven't they? Wow, it's a big old move, isn't it? We've obviously looked at these before because we've been looking at trends. I do think now and again, with some of these moves we get in stocks, I do think I should perhaps trade stocks more or at all. But then that's not really focusing, is it? But it's a great move in Nvidia. So we had, really, if we pick up on the big trend from up here, hang on a sec. Oh, God, I can't get it. There we go. So it looks like that. Absolutely breaks out the trend, bang, pulls back a little bit, and off we go. So for me, buyer of a dip. If you're a buyer up here, the only question is where does your stop go as usual? That would be my question. If I was trading it now, probably the closest I would want my stop. It gets quite gappy, does it? That's earnings, isn't it? The closest I would want my stop would be the other side of 220, which is still, it's it's a 15% stop and a bit more from where we are now, but it's a big mover. But absolutely great trend on Nvidia and AMD. AMD is the chip supplier as well, isn't it? AMD looks like a calmer version of Nvidia at the moment. But again, we've clearly looked at this before because those lines are on already. Again, for me, absolutely a buyer of a dip. This was a nice dip, the old hindsight trade back below 80, and here we are at 97. So yeah, I'll be a buyer of a dip on AMD as well. Dollar yen is, I guess, going to look a bit similar. Yeah, I mean, actually, that looks a bit more interesting than dollar index. So if you remember, dollar index, I was talking about the big lows down here. The dollar index has turned round. Dollar yen hasn't. But that, for me, that's another one to watch next week and be potentially, for me, a buy of the dip, right? To see, does the old low hold? Does the old low at 127.20 hold on the dollar against the Japanese yen? Interesting market, I think. Let me put a little yellow thing by it so I remember it for next week. There we go. So that's an interesting market. So for me, watching for the bounce. Does it bounce? And do we have another run up to 138 on dollar yen? I'm heading to sleep at 4 a.m. and waking at 9:30. That's bad. You need to get more sleep than that. Very important. Sonny Jason, I'm probably pronouncing your name wrong there. He's chucking in their things. MicroStrategy Incorporated. It's not as compelling for me, that one. It's a little bit sideways. So no, I'm not as much a bigger fan. Deutsche Bank. Deutsche Bank's getting clobbered, isn't it? Because of, I'm guessing, well, because we saw the Credit Suisse takeover, didn't we? Last weekend. Yeah, Deutsche Bank. So what have they done? Let's have a look at the numbers. So they were €12 about a month ago, and they're 8 and a bit now. I mean, historically, they've always been a bit, I mean, they're back down to these sort of levels, aren't they? What would you do? I mean, it's a bit of a buy the falling knife trade, isn't it? I mean, if you thought it was all being a bit overdone, be a buyer with a stop the other side of €7. Interesting one to watch next week with all the banking shenanigans going on at the moment. You know, is there? Let's have a quick look. Is there actually any news about this, or is it just sort of collateral damage? Fresh banking sell-off grips Europe and sudden. Oh, it's their insurance, isn't it? Is it what are they called? The German after the cost of insuring against this default. It's credit default swaps. That's it. The CDSs. So okay, so they've gone up. So the implication is there's more risk with Deutsche. So blah blah blah. There we go. Let's see what happens next week. Look at Deutsche Bund. Oh, never look at the Bund. Great market, the Bund. So European bonds. There we go. Euro bonds. Let's get that off. Let's take that off. Remove drawings. This is another favourite market of mine. I don't talk about it much because most retail traders not that interested in bond markets as a rule, but great markets. Big trend. Bund still down, and that goes back to whenever, December 2021. Quite a bit messy and a bit scrappy over the last few days. I mean, you could take the view the big trend is down. Do you want to be a seller of German bonds on the medium-term chart? Bit of resistance at 140.60. So that's the big picture view. You know, okay, we've had a bit of excitement this month, but it hasn't really changed the trend. That's what I would say is the big picture view. Shorter-term view. Actually, the short-term view is interesting as well. You know, it's been pretty. I mean, I was thinking about buying them on Tuesday of this week, but it just kept selling off, so I didn't bother. And it sold off a bit into Wednesday, and then it turned around. I mean, you could take the view from a short-term trade. There's that level. You know, what 140.68 was the level on the big charts. 140.30 has been the high for the week so far. I think it's an interesting one to watch next week to see, does it run out of steam yet again ahead of these 18th of January highs? So, yeah, but you do get, absolutely in these bonds, you get some really good trends now and again, like here. Lovely downtrend all the way through Feb. Nice uptrend and a lovely downtrend. So you do get some good trends in these bond markets. A bit harder to call over the last week, I think, last couple of weeks, but interesting to see what happens going back to the dailies on this 140.70 sort of area. GameStop, we looked at GameStop. MNMD. Mind Medicine. MindMed looks a bit bombed out to me. What do you reckon? So they were, what were they? $84 a share in April 2021, 2 years ago. Less than $3 today. It's not absolutely not one for me. As I often say, I hate these little bombed out stocks. For me, I would take the view that the trend is still down off these highs in Feb. If I absolutely had to be a buyer, I'd still want my stop loss to the other side of $2. So it's like a 30% stop loss, but it all looks a bit too bombed out to me. The old Mind Med. Aussie dollar, US dollar, Aussie dollar. There's the dailies. I've looked at this a few times over the last couple of weeks, and I just don't know. What would you say? I think it's difficult. So for me, you say, right, well, the trend was up on the Aussie from October into Feb, and arguably isn't anymore. Is the trend down? I'd say probably more down than up. So for me, I'd rather be short, but it's the sort of thing I look at it and think there probably isn't a trade for me there. So for me, I'd rather be short as long as it doesn't break. Let's call it 68. So the last couple of days, again, the old Harry Hindsight trades, they were okay. Up to that old high from March, but it's a bit too choppy for me, to be honest. But I'd rather be short than long, I think. When you get a YouTube account for trades next week, we'll start doing some more live trading next week, and it will be with that broker that I've talked about, and I talk about my webpage. So that's when it'll be next week. I would say many of the banks could be good opportunities now that they've been smashed. Either there's a bank crisis or it's nothing. I think that's a very good point. There either is a bank crisis coming, in which case they're going to get smashed even further, or the market's overreacted. I am leaning towards overreaction. Yeah, it feels a bit knee jerky. Although Credit Suisse did need to get taken over, let's not forget, or did get taken over. It does feel a bit knee jerky after this thing, Silicon Valley Bank. But let's see. Poste Italian, appropriately enough, from Postman Pat. All right, Postman Pat. Poste. Okay, so that I'm guessing that's the Italian post office. It's quite volatile, isn't it? I'd be a buyer. It's not really trading like a post office that you'd expect a post office to trade, is it? It's a bank. There's a bank. It says regional banks. Why don't they call it banca then? Banca Italiani. Anyway, so it's a bank. What do you reckon? I would be a buyer, and it goes back to the comment just from Kevin actually saying, do we think the market's overreacting? So it's not one that jumps out at me and think I want to be a buyer. But if I was a buyer, I'd put my stop loss underneath the recent low, would be the closest, or underneath 8.50, 8.5 euros maybe. I mean, pretty volatile, isn't it? It was, what was it? Beginning of March, just over 10 euros and been down to 8 and a bit. Let's see. David Jones saying, buy the dips on Bitcoin. Some time ago, you didn't want to be near crypto. No, I know it's I think I wrote about it in last week's newsletter. I am still to be convinced about the utility of cryptocurrencies, and I do think, because I've not had a crypto rant for a while, I do think they're a great invention for separating people from their money, and it does suck in a bunch of people who shouldn't be trading. So there is, all of those caveats, but as a speculative thing, you can't argue. I can't argue with the moves we've seen on the old cryptos. So let's see. Nvidia, we looked at Nvidia. You're short Aussie dollar. Philip Morris. I sold my Imperial Brands stock the other day. I've still got British American Tobacco. Philip Morris tobacco stock. All these tobacco stocks are getting hit so much. If there's a banking crisis coming, surely everyone's going to be smoking more. But to be serious, they'd normally be seen as defensives. But Bats, Imperial Tobacco, and Philip Morris have been hit. So yeah, it still looks weak, doesn't it? It's been a bit sideways for a while now. I think it's interesting. It's interesting if it gets near the bottom of the range. They've been stuck in this range. And the bottom of the range is 82, so they're 10% lower. If you look at Bats, this is the one I've got. It's not going to look, and I probably should have sold it by now. It doesn't look that dissimilar. Good dividend yielder. Defensive stock. Did well on the way up into July. It's given back a chunk since then, though. So, yeah, still weak. What are you invested in long term? My longer term investments are pretty boring, and they are mainly ETFs that track the S&P and the Nasdaq 100. That's my longer term stuff. So there you go. Yeah, so it's just pretty boring. All that stuff. I've got a few shares, but I tend not to focus on that for my really long term stuff. DAX. Yeah, we looked at the DAX. Is it time to buy gas? We had a look at gas. Yeah, I'm assuming that's natural gas, isn't it? Or state gas. Is it state gas you mean? I don't know. Do you mean state gas or natural gas? Or the gasoline trade index? Don't know. If you want to whack it in, I want to have a look at it. Don't know. SCHW. Who's SCHW? CDS. Oh, Charles Schwab. Wow, they've been hit hard as well, haven't they? So they've gone from. It is interesting, isn't it? How all this fear and greed throughout the financial, not greed, throughout the financials at the moment. So Schwab were trading at $80, and now they're trading at 52. What about First Republic, that bank that did need a bit of help? Oh, that's even got hit even again, isn't it? So that was the bank after the Silicon Valley Bank. We saw some of the big Wall Street banks put money into First Republic, which was here, jumped up to $50, and here they are now at 12. So, there is still a lot of concern in the banking sector. Can we have a look at Ford? Yes, we can. Ford Motor Company. I would be a buyer. It had this brilliant run. In my head, I always think it's doing well, but it's an old run from 2020, the COVID lows at $4 to $25 just over a year ago, and here we are at 11. So it's a bit boring. I would be a buyer because it's at the bottom of the range. Is the reason there? That's with the stop the other side of perhaps $10, and see does it pick up a bit of momentum. But I mean, you could. I never look at these things, but for people who look at patterns and stuff, it's a bit of a triangle-y type pattern thing, isn't it? I mean, I never bother, but we've got good support. We have had good support ahead of $10.50. Let's see what happens. Lockheed Martin. A bit boring, isn't it? I mean, it's been absolutely positive over the years. What would you do though? You're just sort of buying, it's been as high as 500, as low as 440, and it's sort of halfway in the range, isn't it? It's sort of $30 from the top and $30 from the bottom. If I had to do anything, I'd be a buyer. A short-term trade. Be a buyer. If we flip it over to the hourlies, it might look a bit clearer. Be a buyer with a stop at maybe 462. But on the dailies, it's all a bit sideways, isn't it? Could we have a look at TLT? Is TLT just? I thought it was the Treasury bond ETF, isn't it? So that's going to look very similar to T-bonds, isn't it? I mean, you could make the argument that the trend is over. Yeah, the downtrend is over. You could make that argument. It just hasn't gone anywhere since that happened. So for me, if I was in it, I'd be happy to stay in it and see what happened. If I didn't have anything on, I'd rather wait and say, do we get some weakness down to 100? does the thing break out through 110? So for me, it's a bit of a patience trade, that one on. That's the iShares 20-year Treasury bond ETF. Wait to see which way it breaks and see what happens. BP PLC. Let's look at where's the London listing? There we go. Down there. Oh, that's interesting, isn't it? I think that's an interesting move. I'd be a buyer of BP. We've got the big trend from obviously nothing today is trading or investing advice. You should make up your own mind. We've got the big trend from October 2020 and a bit of a run up to 560. We've been knocked back to this sort of sidewaysy range. I think that's interesting. I'd be a buyer with a stop loss at least the other side of 440, if not wider. Interesting chart, though, on BP. Any thoughts on the gold miner stocks? They haven't been going up considering the big increase in the price of gold. I must admit, I never look at them. I wouldn't even know a gold mining stock. So I'm trying to find the gold miners index. There we go. Nasdaq US benchmark. Oh, what's the word I'm looking for? Is an ETF? Let's have a look at that anyway. The gold miners index. I mean, the Nasdaq gold miners index has ticked up a bit. What else have we got? VanEck, that's the one. I remember now. It has ticked up. I mean, the miners, it hasn't ticked, like you say, it seldom ticks up the same sort of pace that gold ticks up. If gold is going to be strong, then you'd expect the gold miners, if we do start seeing all-time highs on gold, which I don't think we're going to, in my opinion, what do I know, then we would expect to see the miners follow suit. But they have had a bit of a move up, but not the same sort of pace as gold. Lumber. I thought I'd missed it actually. I do think there's a trade in lumber, and I looked at it middle of this week and I missed it. I would be a buyer of lumber. I mean, it's, for me, it's as simple as that. Although I haven't bought it yet. We had this big downtrend from March 2022. So we were 12 months into that. This was the latest bit of the downtrend. Pumps up to 540, comes back down. We've held above the old lows. If I was a buyer now, then my stop is going the other side of 365. The only thing I've got against this is the fact it looks so obvious that it looks too obvious. So there's perhaps the argument, if the thing breaks down, if I was long and the thing breaks down below 365, to go short, because a lot of people will be thinking the same thing. But 365 has absolutely been a floor for the price of lumber. So I think it is interesting down at these levels. That's what I think. Copper, perfect for a short. I think copper, someone was asking this morning, I think it's just quite a mixed picture on copper for me at the moment. We did have a nice uptrend from October into Feb. And then we've fallen out of that. We've got a bit of a downtrend. But you're right, based on a shorter term chart, it looks like a short. And if I was going short, I'd probably have my stop above 420 or something like that on copper. But I find that quite a confusing one at the moment, the old copper. Gazprom. Where's that trade? Is that Moscow? Yes, I mean, it's not one for me. I mean, not surprisingly, they've had some volatile movements over the last year. I mean, what do you think? I mean, where's it been? It's been as low as 151. I'm guessing this is rubles, isn't it? And as high as 177. I mean, for me, it's a bit too scrappy for me. Barrick Gold. Let's have a look at that. Barrick Gold Corp. Yeah, I mean, it doesn't look that dissimilar to that gold miners index, does it, that we looked at? So, yeah, let's see. But well off, if you think that gold is only about 5% below its all-time high, Barrick Gold is about 30% below its all-time high. Let's see. So I think we'll start to wrap things up there. So there's lots going on. I probably won't be doing a trade today, I don't think. So I've got no short-term trades to end the week, but I am absolutely watching US stock market indices next week, given the volatility we've had. I think gold, oil is really interesting to see what happens. Is it trying to build a base down here, although the big trend is still down? So, lots to keep an eye on. And this dollar index thing, what's going on with the dollar index? Is this just a bit of a bounce before it goes back to have a look at the lows for the year so far and perhaps break below them? Or is it going to turn around? I don't know. We'll see. We'll see what next week brings. So as usual, next week I think I'm going to do an analysis video on oil early next week. So make sure you're subscribed with the notification thing pushed for that. To see the broker, the short video, 10-minute video I did of why I use the broker I do, go to the website, jonesthemarkets.com/broker. And you can see details on the trading course I run on there. Short-term trading, long-term trading, live webinars, Trustpilot reviews, all that stuff. And as usual, any questions, drop me an email. I don't have all the answers, but I can always give you the benefit of my years of experience if you have a question or anything. But we'll wrap things up there. We'll do it all again this time next Friday. So in the meantime, good luck with your trading.